When most people think about money today, they picture green paper bills or digital numbers on a screen. They assume the dollar will always be king, that gold is some relic from a bygone era, something their grandparents might have worried about but has no place in the modern world. But here's what they don't see coming. Right now, beneath the surface of financial markets, central banks, and global trade, something fundamental is shifting. Gold isn't just making noise, it's making a statement. And that statement could reshape everything you think you know about wealth, power, and the future of money itself. The numbers tell a story that most financial media won't touch. In the past 2 years, central banks around the world have been buying gold at levels not seen since the 1960s. We're talking about hundreds of tons, purchased quietly, systematically, and with a purpose that goes far beyond portfolio diversification. These aren't random purchases by nervous bureaucrats. This is strategic positioning by institutions that understand something the average investor doesn't. They're preparing for a world where the dollar's dominance isn't guaranteed. But this isn't just about central banks hoarding shiny metal, it's about trust. It's about what happens when the foundation of global finance starts showing cracks, and smart money begins looking for alternatives. The dollar has been the world's reserve currency for over 7 decades. It's the currency that oil is priced in, the currency that international trade flows through, the currency that gives America unprecedented power over the global economy. But empires built on paper have a history of crumbling, and the signs are everywhere if you know where to look. Let me paint you a picture of what's actually happening behind the headlines. China, Russia, India of other nations, and dozens are quietly building systems that bypass the dollar entirely. They're creating trade agreements that settle in their own currencies, establishing payment systems that don't route through New York banks, and yes, they're accumulating gold like their economic lives depend on it. Because maybe they do. This isn't some conspiracy theory or doomsday prediction. This is geopolitical chess being played at the highest levels, with moves that most people won't understand until it's too late to position themselves properly. The question isn't whether this shift is happening. The question is how fast it accelerates and what it means for anyone holding dollars, earning in dollars, or saving for retirement in dollar-denominated assets. Here's what makes this moment different from every other time gold has been in the headlines. Previous gold rallies were driven by inflation fears, currency crises, or market panics. This time it's different. This time it's structural. Nations aren't buying gold because they're afraid of temporary market volatility. They're buying gold because they're building an alternative to a system that has served American interests for 3 generations. Think about it from their perspective. For decades, countries around the world have had to hold massive reserves of US dollars to participate in global trade. They've had to accept that their economic policies could be dictated by decisions made in Washington. They've watched as sanctions and financial warfare became tools of American foreign policy, cutting entire nations off from the global banking system with the flip of a switch. And now, finally, they have the technology, the cooperation, and the motivation to build something different. The BRICS nations, representing nearly half the world's population, are leading this charge. Brazil, Russia, India, China, and South Africa, along with new members like Saudi Arabia and the UAE, are creating trade mechanisms that reduce their dependence on the dollar. They're talking about a commodity-backed currency. They're building payment systems that connect their economies directly. And at the center of many of these discussions is gold, the one asset that no government can print, no central bank can manipulate, and no sanctions can freeze. But here's where it gets really interesting. This isn't just about replacing the dollar with gold. It's about replacing the entire architecture of global finance. For 70 years, the world has operated under what economists call the Bretton Woods system and its aftermath. Under this system, the dollar became the world's reserve currency, backed first by gold and later by nothing more than trust in American economic and military power. Every international transaction, every oil purchase, every trade deal has flowed through this system, generating enormous profits for American banks and giving the US government leverage over the entire global economy. Now imagine what happens when that system starts to fragment, when major oil producers begin accepting payment in Chinese yuan backed by gold, when trade between the world's largest asses new economies by P. York entirely, when central banks start viewing gold not as a hedge against their own currencies, but as the foundation for an entirely new monetary system. The traditional financial establishment wants you to believe this is impossible. They'll tell you that the dollar is too entrenched, too convenient, too powerful to be displaced. They'll point to the size of US financial markets, the stability of American institutions, the network effects that make the dollar indispensable. And they're not wrong about the dollar's advantages. But they're making the same mistake that every dominant power in history has made. They're assuming that their position is permanent, that the rest of the world will continue to accept a system that primarily benefits them. History suggests otherwise. The British pound was once the undisputed king of global finance. London was the center of the financial universe, and the idea that some upstart American currency could challenge sterling seemed absurd until it happened. The transition wasn't smooth, it wasn't predictable, and it certainly wasn't comfortable for anyone holding pounds when the music stopped. Today's shift toward gold represents something even more fundamental. It's not just one reserve currency replacing another. It's the global economy potentially returning to a system where money is backed by something real, something that can't be created out of thin air by politicians facing budget deficits or central bankers trying to stimulate growth. This matters for every person trying to build wealth, protect savings, or plan for retirement. Because when the foundation of the global monetary system shifts, everything else shifts with it. Asset prices, currency values, trade flows, investment opportunities, even the basic assumptions about what constitutes money, all of it becomes fluid. The early signs are already visible if you know what to look for. Gold prices have been climbing steadily, but not in the dramatic, panic-driven way that characterized previous bull markets. This rally has been methodical, persistent, driven by steady institutional buying rather than retail speculation. Central banks from Turkey to Singapore have been adding to their gold reserves. Mining companies are struggling to increase production fast enough to meet demand, and perhaps most tellingly, the same financial institutions that have spent decades dismissing gold as a barbarous relic are quietly building their own precious metals trading desks. But this story isn't just about gold winning, dollar losing. It's about and the fundamental rebalancing of global economic power that has been building for years and is now accelerating in ways that most people don't fully grasp. The countries driving this change represent the majority of the world's population, much of its natural resources, and an increasing share of global manufacturing and trade. They're not trying to destroy the American economy or crash the dollar out of spite. They're simply building systems that serve their interests better than the current arrangement. And those systems, increasingly, have gold at their foundation rather than promises from Washington. What makes this shift so dangerous for dollar holders is that it's happening gradually, then suddenly. Most Americans won't notice until the consequences hit their daily lives, but the dominoes are already falling. When Saudi Arabia signs oil deals accepting Chinese yuan, when Russia and India trade in rupees, when African nations start pricing commodities in their own currencies backed by gold reserves, each of these moves chips away at the dollar's monopoly. The Federal Reserve understands this threat better than they let on. Why else would they be so concerned about inflation, so desperate to maintain credibility, so careful with their language about the dollar's strength? They know that the moment global confidence wavers, the moment other nations see a viable alternative, the game changes completely. And that alternative is being built right now, transaction by transaction, trade agreement by trade agreement, gold purchase by gold purchase. Here's what most people miss about this transition. It's not just governments and central banks positioning themselves. Smart money, the kind of institutional wealth that moves markets and shapes economies, has been quietly rotating into hard assets for months. Sovereign wealth funds, family offices, pension systems with 100-year time horizons, they're all reading the same signals and drawing the same conclusions. They understand that currency wars aren't fought with bullets and bombs, they're fought with trade flows, reserve accumulations, and the slow strangulation of financial networks. When China launches a gold-backed digital currency that can settle international transactions instantly, when oil producers offer discounts for payments in anything other than dollars, when the world's fastest growing economies create their own version of SWIFT that excludes American oversight, the dollar doesn't collapse overnight. It just becomes less necessary, day by day, until one morning the world wakes up and realizes the king has no clothes. The timing couldn't be worse for America. Federal debt has exploded past levels that would have been considered catastrophic just a generation ago. The government needs to issue trillions in new bonds just to keep functioning, and those bonds need buyers. For decades, foreign central banks were reliable customers, recycling their dollar surpluses back into US Treasury securities. But what happens when those same central banks decide they'd rather hold gold, or yuan, or anything else that doesn't depend on American fiscal discipline? The answer is already becoming visible in Treasury auctions that struggle to find buyers, in foreign reserves that are being diversified away from dollars, in trade relationships that bypass New York entirely. The Federal Reserve can print money to buy government bonds, but they can't print legitimacy. they can't print trust, and they certainly can't print the natural resources and manufacturing capacity that other nations are using to build alternative systems. Meanwhile, gold sits at the center of these new arrangements like a gravitational force that everyone understands but few discuss openly. It's the one asset that every central banker respects, every government recognizes, every culture values. It can't be sanctioned, frozen, or manipulated by any single nation. It exists outside political systems while remaining acceptable to all of them. This is why the current moment feels different from every other monetary shift in modern history. Previous transitions happened because one dominant power replaced another, but the fundamental structure remained the same. One fiat currency replaced another fiat currency. One central bank's promises replaced another central bank's promises. But this time, the alternative being constructed isn't based on promises at all. It's based on something that has held value for 5,000 years of human civilization. The implications ripple through every aspect of the global economy. International trade that currently requires dollars suddenly has alternatives. Central banks that currently hold treasury bonds as reserves start questioning whether those bonds will maintain their value. Investors who assumed dollar strength was permanent begin hedging against dollar weakness. And ordinary people, the ones who work for dollar wages and save in dollar accounts, find themselves holding the bag when the music stops. But here's the part that should terrify anyone paying attention to these trends. This transition doesn't the dollar to fail require catastrophically. It doesn't need hyperinflation or economic collapse or dramatic headlines. All it needs is for the dollar to become gradually less essential, less convenient, less trusted than the alternatives being built. And once that process starts, it feeds on itself. Every nation that joins the new system makes it more attractive for others. Every trade that settles outside the dollar system makes the next one easier. Every ounce of gold that moves from American vaults to Chinese or Russian or Indian reserves shifts the balance of monetary power. The American financial establishment has spent decades convincing people that this kind of transition is impossible, that the dollar's advantages are insurmountable, that challenges will always fall short. They point to failed attempts in the past, to the practical difficulties of coordinating among different nations, to the network effects that make existing systems sticky, and they're not wrong about those challenges. But they're fighting the last war while their opponents are building entirely new weapons. Technology has eliminated many of the coordination problems that plagued previous attempts to challenge dollar dominance. Digital currencies can settle instantly across borders. Blockchain systems can track commodity backing in real time. Communication networks allow instant coordination among central banks that previously relied on slow, cumbersome processes. The infrastructure for an alternative monetary system exists today in ways that were unimaginable even a decade ago. More importantly, the political will exists in ways it never has before. Nations that once competed with each other are finding common ground in their desire to escape American monetary hegemony. Countries that have different political systems, different cultural values, different economic models are discovering that they share one crucial interest, reducing their vulnerability to decisions made in Washington. This coalition isn't held together by ideology or friendship. It's held together by mathematics, by the simple calculation that their combined economic weight gives them the power to create alternatives, and that those alternatives serve their interests better than the current system. When nearly half the world's population and over 40% of global GDP starts moving in the same direction, the momentum becomes unstoppable. So where does this leave you? If you're holding dollars, earning in dollars, saving for retirement in dollar-denominated assets, you're betting your financial future on a system that's being systematically dismantled by half the world's population. The transition won't happen overnight, but it's happening. And when it accelerates, the people who saw it coming will be positioned to thrive while everyone else scrambles to understand what went wrong. Gold's comeback isn't about nostalgia for the gold standard or fear of market volatility. It's about recognizing that the monetary system that has dominated for 70 years is being replaced by something older, something that doesn't depend on any government's promises or any central bank's credibility. The nations driving this change understand that real wealth isn't measured in paper that can be printed at will, but in assets that have held value across millennia of human civilization. The choice facing every investor, every saver, every person planning for the future is simple. You can trust that the current system will last forever, that American monetary dominance is permanent, that the dollar will always be king. Or you can look at the evidence, follow the money flows, and position yourself for a world where gold isn't just making a comeback. It's leading the way to an entirely new monetary order. History doesn't repeat, but if you ignore what's happening right now, it will crush you all the same. The smartest money in the world is already moving. The only question is whether you'll join them before everyone else figures out what's really going on. If this opened your eyes to what's actually happening behind the headlines, hit subscribe. The future of money is being written right now, and you don't want to miss how this story ends.